Morning, and thank you for joining me. I'm Rashawn Gidwani, PhillipCapital's media host and presenter. Welcome to the Daily Morning Note. Stocks fell on concern that inflation could pose a challenge to the global economic rebound, forcing central banks to raise interest rates sooner than expected. Treasuries rose. Traders took some risk off the table as data signaled home builders are struggling to break ground on projects amid high materials prices and ongoing labor shortages. Target Core sank after warning that cost pressures are creeping up, stoking fears they will dent profits at retailers. In late trading, Cisco Systems Inc., the biggest maker of computer networking equipment, slumped on a lackluster revenue forecast, hurt by a shortage of components that's making it difficult to keep up with demand. Let's take a look at what's happening in Singapore. Medical consumable supplier Medtees International Corporation is warning that its third quarter financial year 2021 earnings is not expected to be as strong as the first half of the year. It expects to remain profitable, though. This is mainly due to existing customers completing their stockpiling exercises in 2020, subsequent inventory adjustment attributable to certain customers, and the stabilization of the supply and prices of the PPE market globally, says the company. Notwithstanding the above, such market changes are not expected to have a material adverse impact on the overall financial position of the group, which remains healthy, the company adds. Next up, main board listed SMI Vantage on Wednesday, November 17th, said it is planning to develop a non-fungible token, NFT, publishing business to tap the growing interest in crypto assets. The company noted that sales of NFTs, unique digital assets that can be traded online, often using cryptocurrency, surged to US dollars 10.7 billion in the third quarter of 2021. Market tracker DAP Radar noted that this was a more than eightfold increase from the previous quarter. In a bourse filing on November 17th, SMI Vantage said it has signed a memorandum of understanding with Nasdaq-listed substantial shareholder The Nine Limited to explore developing the NFT publishing business. It added that it expects to conclude finalization of the plans within the next few weeks. Moving on. More East Holdings, a mooring systems company, on Wednesday, November 16th, launched its initial public offering, IPO, for a listing on the Catalyst board of the Singapore Exchange, SGX. The company will offer 0.8 million offer shares and 38.05 million placement shares at Singapore dollars 0.22 apiece. This will bring the total gross proceeds from the IPO to some Singapore dollars 8.5 million. EDBI, the investment arm of Singapore's Economic Development Board, has invested Singapore dollars 10 million in the company as a pre-IPO investor. Moving on. Medtech firm QT Vascular on Wednesday, November 17th, announced that it will hold an extraordinary general meeting, EGM, on December 2nd to seek shareholders' approval for the appointment of 5 new directors. This comes a day after the company said it had received a notice of intention from Mission Well Limited and Tanzri Sariju Benwi, who together hold more than 10% of the company, to call for an EGM to remove QT Vascular's 4 current board members, including Executive Director and Chief Executive Officer Eitan Constantino. Let's take a look at what's happening in the US. Apple announced the new self-service repair program on Wednesday that will let customers buy parts to fix their own iPhones or Macs. The program will first allow iPhone owners to replace their screen, battery, or camera, with more parts coming later. The move appears to be a big win for right-to-repair advocates and is an about-face for Apple. Repair shops and lobbyists who support repair reform have called on lawmakers to implement a variety of rules that would allow for increased access to manuals and official parts. But Apple has lobbied against allowing customers to fix their own products over the years, specifically citing concerns with safety or performance issues from third party parts. It also sells a subscription Apple Care Plus service for its products that offers consumers repairs at a lower cost than non subscribers. Moving on. Target shares fell Wednesday as the big box retailer opted to emphasize its focus on value as prices of groceries, fuel, and other goods rise. Shares were down about 4% in pre market trading, despite beating earnings expectations for the fiscal third quarter. Target CEO Brian Cornell said on a call with reporters that the company is absorbing some of the higher costs it's seeing rather than passing it on to customers. That strategy could squeeze margins. Target topped analyst predictions as sales jumped 13% after shoppers bought Halloween costumes, stocked up on back to school supplies, and kicked off the search for holiday gifts early. It also raised its fourth quarter forecast, predicting comparable sales could rise at between a high single digit and low double digit pace in the holiday period. Previously, it estimated a high single digit increase. Next up, Amazon plans to stop accepting payments made via Visa credit cards issued in the UK starting next year. The e-commerce giant has told some customers that from Jan 19th onward, the company will no longer accept Visa credit cards issued in Britain due to the high fees Visa charges for processing credit card transactions. Visa shares fell 2.5% in US pre-market trading. Next up, Cisco shares tumbled as much as 8% in extended trading on Wednesday after the computer networking company reported quarterly revenue that fell short of analyst expectations and issued weaker than expected guidance. Cisco said per share earnings in the fiscal second quarter will be between 80 cents and 82 cents, excluding some items on 4.5% to 6.5% annualized revenue growth. Analysts polled by Refinitiv had expected 82 cents per share in adjusted earnings on $12.85 billion in revenue, which implies 7.4% growth. Next up, Lowe's beat analyst expectations for fiscal third quarter earnings on Wednesday as the company got a bump in business from home professionals and online sales. The home improvement retailer raised its forecast, saying it anticipates $95 billion in sales. It had previously predicted revenue of $92 billion. Shares rose about 2% in pre-market trading. Lowe's profits rose to $1.90 billion or $2.73 per share from $692 million or 91 cents a share a year earlier. The results outmatched the 2.36 per share expected by analysts surveyed by Refinitiv. That's about it from me. Thank you.